What's going on, man? So I want to take a look at the TradingView screen just to kind of basically test the different returns of a few ETFs I was looking at. So we about to actually create a new screen right now. We about to just put it dividend ETFs. All right, boom. All right, coolio. So look, check this out. No, I didn't mean to do that one. Let me see. It's this one. There we go. All right, cool. So watch list. We're gonna go dividends. What the fuck? What the? Can I not look at ETFs, bro? What the? You can't look at ETFs? My whole everything's just ruined already. I can't. Wait, something ain't right. I can't look at nothing. Oh, because my investments are also ETFs. Oh, brother. Let me see. Oh, you know what? Is there a ETF screener? There we go. Don't save that. All right, I ain't gonna do all that. Let's see, dividends. Cool, there we go. And just like that, we solved it. All right, cool. So I want to get rid of, we can kind of leave that, I guess. Get rid of, price, no, I don't care about that right now. We can kind of look at that right now. What's NAV? I don't know. We'll leave that alone. Holdings, interesting. Expense ratios, interesting. Asset class, equity, so we can get rid of that. Focus, high dividend yield, large caps. Assets under management is kind of cool. Relative volume is useless to us. Price times volume is kind of useless to us right now. Assets under management is cool. Holdings is cool. All right, so what I want to add, can I add CAGR? Fuck. Oh, performance, right? Whatever. We're going to add performance. We're going to add the year performance. Go add the 5-year performance. Add column. We're going to sort this from descending. Okay, and we also need to add yield too. Let's add yield. Boom, 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 boom. Dividend yield indicator, whatever. Cool. Okay, so performance over the last 5 years. So FDV is pretty cool. We got 65% growth for the last 5 years. And this one has the highest yield down here. So honestly, this FDVV is not too bad. All of these yields these two middle yields are really low. But what I will do is I will actually look at the charts of these, and that's kind of the whole reason why I wanted to look at it on TradingView. Let's just call it that for now. And I'm going to actually move these to the front because these are what I really care about. The yield and the performance over the last 5 years, but also we're going to add one more performance. Percentage, actually, we're going to do the last year. That's also important too, because we want to see how it's kind of been performing. And whenever I do performances, I usually do the trailing 12 month. So 5-year yield. All right, that's kind of how we want to look at these. Close this back up right quick. Let's see, cool. All right, so do I have this saved already? Let me see if I got this saved. Let's see. Open template, got short-term swing. Cool. All right, that's still there. All right, about to go over to investing chart. Nice little save. I start looking at these. So FDVV with the highest 5-year percentage and also a decent yield. So back down here would have been a good yield too as well. We got VYM sitting high. We got Kyle sitting high. We got DGRO sitting high. So dividends are doing pretty good right now. For the most part, they are sitting pretty above their 3 and 6 months. All of these are sitting above 3 and 6 month values. They're all pretty much damn near sitting oversold. So these are all sitting in their first Bollinger Band, which means we could be getting a pullback on them soon. But for Devo to be having 5% here, it's pretty clean. The last year, they even up on the last year, so Devo is the lowest. And Devo is going to be the highest yield, so it's usually going to be the lowest returns when it comes to dividends. But this is going to be the one, like, say for instance, and it's not bad by the way, 28% over the last 5 years. So what that is, divided by 3, so it's about 6% per year. So if the market returns, if you at least want an asset that returns you about 10% per year, right? So with this performance being 5 years, this is actually return of 6. But with the dividend yield being at 5.10%, that means return is over 10% total, because what we're missing for growth, we're getting back at dividends. So no matter what, as long as we make it 10% per year or more, we straight. And the rest of these are doing phenomenal. Like this one, I'm tripping. So, actually, I don't know if SCHD is, but it did really good this year. The Schwab fund did really good this year. Actually, like most of its return came from this year, within the last 5 years. So that's a little sketchy. I don't too much like that. I don't like how all of its kind of returns came within its last 5 years, though. I'm not gonna lie. It's been trading sideways since 2021. I don't really like that personally. I ain't gonna hold you. But the yield is pretty straight on it. So hey, I wish I could get the compounded annual growth rate. That's kind of what's making me what I don't like. I don't like how I can't get this growth rate. That's what's kind of annoying me. That's what's annoying me. I don't know. I don't know. I guess they don't do compounded annual growth rate on here. At least not here. I wonder if they do on the stock screen. Let me see right quick. If they do, I'm gonna be hot. Let's see something here. No, they don't. Cap X, earnings, EBITDA, free cash flow, gross profit, gross margins, continuous dividend growth, dividend per share growth. Ain't really doing stuff for real. Let's open this back up. Let's do this. Yeah, niche focus, management, strategy, dividend treat, dividend frequency, leveraged, expense ratio. Cool. Well, whatever. Anyways, these are kind of the ones I was looking at. Like for instance, this one, if we just break that up, average it, basically divided by 5. 5 divided by 60 is, is that what, 12? So that's basically like 12% per year. Plus this 2.7%, that's like 14%. So if we kind of just all divvy pretty much all of this up, we'll for the most part be sitting over 10%, which is what you want for the most part. So yeah, this like before whatever, what, 5, so 10. So yeah, all of these are pretty much over 10. Yeah, 10. And if they go over 50%, it's 10. So if they go over 50%, it's 10. 33%, that's going to be 5 divided by 3, 6. So yeah, it's going to be 6, 7, 8, 9. So yeah, the Schwab fund is the only one that's kind of iffy. It just hit the 10% mark. But this one definitely hit the 10% mark. Everything else did. That 1% growth, I'm not going to lie. With FDVV doing better, something like, this Cow Z fund and this DGRO fund, I wouldn't be too much of a fan of, honestly. And these are just so similar. These are so similar that like I would obviously like completely cut one of these out immediately. Obviously this one has is slightly, they kind of about what and what, but this one is just doing slightly better by 2% up over the last 5 years. And with it having less growth in the last year, I mean, it's still doing better performing than DGRO. So DGRO, I might just completely like rid of. DGRO, right? One more thing I might actually put in, especially if we're going for long term, I might drop one more performance. And we could do 10 years. We could also do like all time. We want to do an all time. Let me open this all the way up. We want to do an all time here. So everything but Devo. Devo is kind of staying the same, but as long as they keep this kind of metric going, I'm pretty cool with that. I'm not going to lie. And I guess one more thing we'll add is the 10-year. All of these performances actually do matter. I'm not gonna lie. These performances all do matter. We'll do the 10-year as well. Oh Lord. Okay, can we there we go. 1 year, 5 year, 10 year, okay. So for the most part, they all looking good, and that's all that matters. Even on the 1 year, they all looking good. See, with these two being so similar, then I was looking like the assets under management. Kyle Z has less assets under management. This one down here is more diversified, DGRO, with 391 holdings. Expense ratios also play a key. So you would really want to add up all these percentages to kind of see what you got going on. FDVV has a pretty high expense ratio. I'm not going to lie, 0.15% annually. So 0.08, 0.06 is not bad. That's not bad at all. Because you got to subtract these expense ratios from your total profit. So, like for instance, if your 5 years like 65.72, you would divide that by 5 to get your quote-unquote compound annual growth rate, whatever to the source. Just a good, I wouldn't call it a compounded, but you get your growth rate because it's actually not compounded. So anyways, divide that by 5. That'll give you a yearly rate. Then you'll add that with your dividend rate. That'll be a total, expected return. And then you will subtract your expense ratio from that. So if we put all of these in here, we will kind of see what has been the best performing one for the most part. But for now, we'll leave that probably to the next video. I just kind of wanted to get this set up. We'll probably actually go over what are the best ones to get into the next video. But that's pretty much it for the most part with dividend investing. Now, this right here is how you make pure fucking money. Like when it comes to investing, all that, you have 3 ways to make money in investing. You have the way to make money now, which is dividend investing, right? Then you have the way to make money in the interim, which would be either basically like position trading or swing trading. Do you have long-term wealth building, which is where you want to put all your money in from the short term into the long term, which would be your growth stocks, right? So this allows you to start learning how to make money now, to start actually making your money work for you instead of you working for money. Because if you forever working for money, even if you have a business, you will forever be a slave to that paycheck or that invoice coming in or whatever the case is, right? So if you want to actually get to a point to where you can choose to work when you want to work and have your money coming in for you, then you have to learn how to start investing into stocks, investing into other people's businesses, so you can chill, sit on your ass, and make some goddamn money. You know what I'm saying? This shit is not hard. It doesn't take long at all. And if you learn from somebody that actually knows what the hell they're doing, it can show your learning curve by a lot. Because if you don't know what the hell you're looking at, you look at this, you might be like, what the hell going on, man? So if you want to learn how to, start getting into investing, you got to check out the link in the description down below. So that's pretty much it, man. I'm going to see you on the next one. Peace out.